Hello once again. Let's look at the daily scoreboard. Today I will just quickly go through gold and silver, and then we will take a look into the Baltic Dry Index and some companies within. So let's have a quick score of the gold to silver ratio. And you who has followed me recently could see that we broke down from this retest and our resumption. And if we zoom out, we can go to the weekly very briefly. You can see this is a major expanding wedge here, and now we are again back below, and that means that we are in favor of gold and silver to rise as long as we are below this major golden trend line here. It's looking very good for gold and silver. You can also see that we have this red resistance which we broke out of and then just failed a false breakout, and now we are back below again. Two major supports. So now, yeah, gold and silver looking good. Quickly, gold. What happened yesterday was a big day, as you remember. We oh, this is silver. Sorry, my bad. We blew through the red support zone here, and I would expect right now that we are to do some sort of retest. Will it be the upper end of the zone, or will we go all the way down to 3380? That wouldn't surprise me at all. That would actually be very bullish to have this retest right now. Also, this move that we have seen here since March is a big, almost vertical move, right? So to get some sort of pause here would be absolutely perfect. Actually, you can also see the RSI is almost 80. So, so yeah, I think we need to pause here for like 2 weeks. I think we will. We will do. Hopefully, we will be in this zone here, creating a bull flag of some kind, and then we will resume. But I wouldn't buy silver here at all. Gold, similar to silver yesterday, had a big pop above 2K and has now retested this pivot high over here from the triangle. But again, I wouldn't be surprised if we were to retest all the way down to this one here, and hopefully then we resume. So, so yeah. But gold is looking more bullish than silver right now, if I were to pick one. Okay, okay. Shipping, or more in depth, the BDI, Baltic Dry Index. I need to swap to the Heikin Nashi here because it's very difficult to see otherwise. So I, I had this one in one of my videos last week. I can't remember the exact day, but I mentioned that we are probably going to see some sort of bounce here. And today we have a 4% bounce in the Baltic Dry Index. Um, so this was something that I saw had a pretty big probability to bounce here. So hopefully we will get above 1600, and then I think the Baltic Dry Index will go higher. Looking at the ETF, the dry bulk shipping ETF, zooming out a bit here, we have a 2-year time frame more or less. As you can see, this was the blow off top. We came down, went into the squeeze right here, again broke down, and actually went below this golden trend line going back 5 years. You can see it coming across here with multiple touches here, here, broke down, and now we are trying to break back above again right here. Zooming in, you can see this range we have been in for a long time. And again, I'm not the best at the Wyckoff accumulation distribution theories, but to me this looks a lot like the accumulation, where we have the spring below here. You should look into that definitely. It's a very powerful tool. Again, it's not my what I am good at, but I'm just going to mention it. I think we ought to break back above here again, above the gold, this yellow range, back above the golden trend line, and that should be a very powerful buy, in my view, for this the Baltic Dry Index and the companies within. I have found 5 different companies. One is this one, ZIM, and for this specific stock, I have adjusted it for dividends because it recently just paid out dividends and it had a huge move down, as you can see right here. So if we try to adjust it for dividends, I mean, right now what we have seen is we have been in this orange range for a long time, broken down, and actually for the past half year we started to form what I see is a big inverse head and shoulders, and we broke out yesterday, and now we are back testing the neckline here, the blue neckline. And what we want to see, as always, right here is to have a resumption back up. If we were to get a breakdown and getting below this started trend line here, I think you should look out below, because then we're probably in for more downside, and this is just a failed breakout of the neckline. Then we have Scorpio, which is a let's zoom. I think, what was my thoughts about Scorpio? Was it mistake? Yeah, okay, I remember now. So this is Scorpio. I don't know exactly if this is a Baltic Dry index company, dry bulk, but it is a tanker company anyways. And to me, I wouldn't be a buyer here, given that we are in a bearish formation right now. As you can see, the RSI is coming down. It's coming down, and we are just sliding up in this channel here. So I wouldn't be a buyer for this specific stock. But I don't think it is a dry bulk company anyways, but it is a tanker. So this I had to go to log scale because the movement was so big. And this is the Navios Maritime holding. And as you can see right now, we have broken out of the fallen wedge, made a higher high. Now we are back testing. And if I were to buy this, I don't have a position right now. I don't think I will. But actually, the setup is insanely good if you want to play this one. You can actually. Why is it so? What the hell? What the hell is going on? Is it just me, or is this? Oh, anyways. But if you buy here, right, you can set the stop below this low here, and you can hopefully run it all the way up to around 10 would be my guess. So you get a roughly, what is it? You get at least a 10x risk reward here, at least, if not more. 10x looks good. We have the GOGL, which is another shipping company, and right now again had a big run up. You can also see the 1, 2, 3, 4, 5 move, and then we went into a bear flag. Oh, sorry, log scale again. So for now, it's looking quite bearish, but as long as we hold above the neckline, I think we should be fine. Easy, easy. It's not that easy. Let me zoom. There it is on a normal scale. Okay, the last one again. I can't remember if this is a dry bulk or if it is a standard tanker company. But as you can see here, this was the big high back in 2012, sorry. Going all the way down, you can see the touches, coming down, coming down, coming down. Now we have broken out. Did a bit of a funky back test, but a back test nonetheless here. So this one, I think if you can get it down here at these lows, that would be a very good price to get. But also then you just have to wait for the possible breakout above 15, getting out of this long formation right here. But yeah, as long as we are inside, it can go either way. So don't buy it you never buy in the middle of a of a wedge or a flag. Doesn't make any sense. So yeah, that's what I had for today. Hope you liked it again, and please, I would highly appreciate it if you follow me on Twitter. This is where I do most of my charting, and where I try to reply to most of the people who are engaging in my posts. So yeah, please do follow. And same for YouTube, like and subscribe. Um, it would really help me a lot going forward here. So yeah, take care everyone and stay safe. Bye.